All right, guys, what is going on? Welcome back to the channel. This is the beginner day trading strategy part 2 video where I'm going to go over some examples. If you have not watched the first video, then this one may not be as helpful. And this is what that first one was, the easy day trading strategy. This is what that thumbnail looks like. So again, if you haven't seen it, go watch it. But if you have seen it, then let's go ahead and jump right into it. So if you remember from the first video, we talked about a buildup of liquidity. We talked about the market taking an opposing high or a low. We discussed a shift in the state of delivery that is in the direction of opposing liquidity. We talked about framing a risk reward of 1 to 3 or better. And we discussed entries on the 1 minute and 5 minute time frames with buildup of liquidity on the 15 minute and the 1 hour. So this is a real quick refresher for you. We also discussed that the best days to trade is going to be Tuesday, Wednesday, and Thursday. And it's not to say that you can't trade Monday or Friday. It's just for this particular strategy, and especially for beginner traders, we went ahead and just cut off the end of the week and just wanted to focus on the middle 3 days of Tuesday, Wednesday, and Thursday. And that is going to be what we'll be looking at in this particular video, right? So today is actually Thursday, the 28th at the time of this recording. So we're going to look at Tuesday, the 26th, Wednesday, the 27th, and today, Thursday, the 28th. All right, so first up, August 26th, that is Tuesday, so just 2 days ago. All right, here is NQU 2025, right? This is NASDAQ on a 1 minute time frame. So remember, go through the checklist, right? Do we have a buildup of liquidity? Do we have the market trading somewhere to take out a high or take out a low? Do we get a shift in the state of delivery in the direction of opposing liquidity? And if you need to pause the video, feel free to do so. I know some people want to do that, you know, to really challenge themselves. I know most people will probably just watch this and enjoy it like it's a TV show. But if you want to challenge yourself, if you're not familiar with this, then yes, pause it. But I will go ahead and move on. So we do get a buildup of liquidity up here. We have a consolidation. We have a set of highs right here where the high on the right is slightly lower than the high on the left. Okay, we can look at that as low resistant highs. That is in the free beginners series on this channel. If you have not watched that, you can go watch that too. We have lows down in here, which the market trades down and into that, right? It trades not just to the low, not just to it, but through it, right? And it is sweeping liquidity because we get a expansion rather. We get an expansion lower followed immediately by an expansion higher. Then we get, it's actually this lower candle here, but I marked the higher one, where that is your shift in the state of delivery. These 4 down candles got traded through here, and we trade back into it right there. So can we frame a 1 to 3? Yes, we can. Now, why the stop loss right here? This stop loss is actually below this inversion, and it's below this gap as well. So there's actually a few other concepts in here that would help basically protect that stop from being hit. And it's below that old low. So once liquidity is absorbed, we really should not trade below that level of liquidity again. So keep that in mind for the next few examples, okay? So we trade into it and up to 23,565, okay? That is the exit for a perfect 1 to 3. All right. Now, I did not teach you about what is it called, macros in this particular video or in this series. I have taught about macros before on the live streams. If you have never heard of what a macro is, it is the first and the last 10 minutes of every hour, except for the final hour, which is 2:15 to 2:45 Central Time. So to give you an example, the 1 p.m. macro would be 12:50 to 1:10. It's the last 10 minutes and the first 10 minutes of the hour. Okay? So don't let that go over your head. Those down candles being traded through, went long, rallied a little bit more, retracement, no problem, rallied up to the high almost. We pull back a little bit, and then the final hour macro is what took us higher, and you can see that exit at 565 for a perfect 1 to 3 RR. You see that? Pretty cool stuff, huh? Time, price, and context, the law of high probability, which is in the 48 laws video. So, but to continue, now we will go over August 27th. That was Wednesday. All right, here we are looking at ESU 2025. That is the S&P 500. This is the 5-minute chart. So remember, we discussed in the last video and a few minutes ago, 1 minute and 5-minute time frames for entry. So it may not always be 5 minute, may not always be 1 minute, right? They're interchangeable, if you will. If you can't get a clean setup on one, you can look at the other, basically. Okay, so same thing. Go through the process here. Do we have a buildup of liquidity? Do we have the market trading in the, I guess, opposite direction? And then do we get a shift in the state of delivery towards, right, in the direction of opposing liquidity? And are we going to be able to frame a 1 to 3 RR based on that idea? You have a really extended consolidation here, right? Which we do trade out of it. We trade back into this consolidation, back into this range. Then we trade lower. So this is actually London's low by the time equities rolls around, right? So we extend below London's low. We don't get a shift here. We extend lower. So we saw expansion lower. Then we saw expansion right after that, right? So expansion met with expansion is a potential reversal. If you have not seen, there's a series that T-Trades did. If you want to watch his YouTube channel as well, he'll tell you more about that. But that's the extent of what I'm going to tell you here. Expansion lower met with expansion higher is a potential reversal. So do we get a shift in the state of delivery? Yes, we do. Those down candles here get traded through. So the entry would be right when we get back into that series of down candles. The market rallies off of that. It trades back into them, right? But need not worry. If the stop is at the body low, we are allowed to take drawdown. Drawdown is not bad. It's not fun. It doesn't give you, you know, like, oh, your sniper entry, right? But that's not always what it's about. It's about taking good trades. So we get like not even 2 points, like 1.5 points, 6 or 7 ticks of drawdown. Then we expand higher, one more retracement, and then boom, we get our extension above this consolidation to the tune of a 1 to 3 RR. All right, we'll take a look at August 28th, which is today. All right, at 8:39 this morning, I posted in our Discord looking for a possible run to 23,762.5 and maybe even 23,800. Now, what would that be for? Is ES priced at 23,000? No. Is Dow Jones priced at 23,000? No. NASDAQ is priced at 23,000. So that should be pretty key, right? So what I'm looking for right inside equities open by the time I sent that message, right, is I'm looking for higher pricing. So now we'll take a look at NASDAQ. 1 minute time frame. So 839 is about right up in here. So are we going to buy on the way up? No. Or do we get a bias to say, okay, well, the 760s are up here, or 760s like right here, 23,800 is way up here, right? A little bit off the scale of this particular chart. So I'm anticipating higher pricing. But if we are going to go higher, what are we going to do first? We're going to go lower first, right? So we have a buildup of liquidity here. And there's also something up. I'm not going to say what it is, but there is something up here on a higher time frame that I am pointing to my community towards. Now, I'm not going to give that to you here. That's outside the scope of this video. You really don't even need it for this example. What we need to do instead is stick to the rules here, right? So buildup of liquidity. We have some highs right here, and the high on the right is slightly lower, right? We trade down, so we take this short-term low here. We also take this short-term low here, as well as the one all the way down here, which I do believe is London's low. So that gets taken right here. So what happens after that? Low, high, lower low, right? So we get expansion lower, followed by expansion higher. So what can we expect after that? There is your shift in the state of delivery. Price trades down into that down candle here. Yes, there's some drawdown on that. Market extends higher. We actually come back down into the entry here. No problem. Rallied, retracement. There's an imbalance right here. Rally all the way up. One more retracement, and then a final rally up to 747. Which is a perfect 1 to 3. Like I told you earlier, keep in mind that the stop doesn't have to go to the body or even the low. Sometimes it can go to the old low, because if the liquidity has been absorbed, it shouldn't trade there again. So the perfect 1 to 3 is right there. Now you might think, well, hold on, John, that doesn't make sense. You said 760 something and price didn't hit that. I didn't. You don't need to have price hit your targets in order to get that 1 to 3 risk to reward ratio. But actually it did. We actually do run for the 760s. It just does that a little bit later. So here's that same screenshot at 8:39, waiting for that, or excuse me, not waiting, looking for that possible run to 762.5. We trade down. We rallied up and then got that retracement. I sent out at 9:20. I would like to see strength from here. If not, we may not have made the low of the day. What do we get? A small pullback in a few minutes, no problem. Boom. Signs of strength. NQ clears out this consolidation here, that buildup of liquidity right there. Boom. That could be a partial or a TP. We get a retracement back into the range. Then we extend for 23,762.5. Pretty cool, right? Of course. So thanks to Z, they sent out this a little bit earlier today. Thank you for this call out. Just passed 2 combines and in profit on my first day of a funded account, right? And he's replying, or they are replying to my message from earlier about that 762.5 level. So if you would like to join us in the Discord, you can. All you got to do is become a member. It's $24.99 a month. If you use Apple Pay, it will be $29.99. That money goes to Apple and it doesn't benefit me at all. Okay, you're just paying an extra $5 to Apple for no reason. So if you'd rather use the website right here on YouTube, it should be $24.99. Okay, and then once you become a member, you can join us in the Discord by linking your Discord and YouTube channel together. Right, you go to your Discord user settings, then go to connections, and then sign into your YouTube channel, and you'll be able to join us in the Discord, where I call price levels in advance, All right. So hopefully you got some value out of this video. If you did, drop a like. I would greatly appreciate that. And if you really, really got some value, if you really enjoy this stuff, then send it to a friend so they can get some value as well. So with that being said, y'all be good, be blessed, don't do anything stupid, and I will see you in the next one.